Okay everyone, back again to me, and this video I will read some article again like usually before. And before I start, don't forget to like, comment and subscribe. This article by Wayne Cole. Sydney Reuters. Asian shares were left in limbo on Friday while the US dollar made all the running as recession clouds gathered over Europe and highlighted the relative outperformance of the US economy added concern about the health of China's economy show. MSCI Broad Index of Asia Pacific share outside Japan is 0.1%, to be down 1% on the week, and had the yuan on course for its worst week since May. The yuan fell past the psychological 6.8 per dollar mark and was within a whisker of striking a 2-year trough. Stimulus hopes kept Chinese blue chips flat while South Korea lost 0.4%. Japan's Nikkei held steady, helped in part by a renewed slide in the yen. S&P 500 futures eased 0.2% and were little change on the week, having repeatedly failed to clear the 200-day moving average, while Nasdaq futures slipped 0.2%. Eurostoxx 50 futures dipped 0.2%, while FTSE futures edged up 0.2%. The threat of higher borrowing costs hung over markets as no less than 4 U.S. Federal Reserve officials signaled there was more work to do on interest rate, with the only difference being on how fast and high to go. Markets are leaning toward a half-point hike in September, but see a growing race of a 75 basis point or BP hike, currently a 2 per 5 change. Rates are seen peaking at least at 3.5%, though some Fed members are arguing for 4% or more. There are no signs that the labor market or inflation data are slowing sufficiently for the Fed to declare victory on inflation, said Brian Martin, head of G3 Economics at ANZ. We see upside risk to the Fed's inflation projection, and we expect this and dot plot to be revised up in September, he added. We have revised up our year-end Fed funds rate forecast by 25 BP to 4%, and now expect 350 BP hikes over the remainder of 2022, all of which underlines the importance of Fed Chair Jerome Powell's Ouch 26 speech at Jackson Hole, usually a seminal event on the central bank calendar. The bond market is clearly on the hawkish side, with 2-year yield 33 basis points below the 10-year yield, and flashing recession warnings. Dollar in demand. Okay, maybe that's all from me. And don't forget to like, comment, and subscribe. And see you in the next video.